Are you worried that high interest rates are going to prevent buyers from buying your home?
Good question, Mary. We got to tune into this episode to find out.
Welcome back. Super excited to have Sean Guerra, my good friend from Tomo Mortgage, here with us today as we go through what happened in August. Here we are in September for a market update. So let's jump right into it because we all want to know what's happening in the world. And then from the world, we want to know what's happening in our local market, which will, by the way, will be at the end. So either fast forward all the way to the end if you don't want to hear all the national stuff. There should be some chapters in there, so make sure we get this using the way you want it. So let's talk about home sales right now. You're going to see that home sales in the nation, and you're going to be surprised when you hear ours in Southwest Florida, but they're down about 16.6%. As you can see in this graph, the Northeast, the Midwest, the South, and the West is down the least amount. And that's year over year, region seasonally adjusted for annual rate. So one thing to note, but Sean, tell us what Lawrence Yun, chief economist at NAR, what's he saying that's driving that?
Our friend Lawrence says that there's two factors that are driving current sales activity: inventory availability and mortgage rates. I definitely know that. Unfortunately, both have been unfavorable to buyers.
Yeah, which is interesting because, we still don't have enough inventory. We're going to show you that both nationally and locally. You'd be surprised about that inventory number. And in our neck of the woods, this is actually when we start to get more inventory. But if you look at this particular slide, average annual inventory of homes for sale, and this is a teeny tiny slide. So I'm going to try and look at it, Sean, while I'm going over here. It goes all the way back to, does that say 1999? And you can look
it
at
sure does.
right? Homes for sale. And look at what happened and spiked in 8, 9, and 10. And we know what happened during those years. But look, we have come down. And although we had the least amount of inventory in 2021, we still are currently in annual inventory, months of inventory. We're at 3.3 months of inventory. Compare that to what happened in those high months. We don't have enough inventory for people to buy.
What should it be, Mary? What should it be for those watching?
A normal market would be 6 to 7 because we have 12 months of inventory. It's a buyer's market, anything below 6. And it's, a seller's market, anything below 6. And a buyer's market, anything above 6, 7. And the further you get away from that, the way the market responds, right?
Yep.
Which is kind of interesting. Great question. You look at this and you look at, you compare the inventory out there, Sean, with the new stuff that's being built. And we saw a big, huge rush as we went into, 5, 6, 7, started to drop. And then we've had 14 years of below inventory of the average that we needed. Look at that. And we're still, our average is below in completed units. So we don't have existing homes out there. We don't have new homes that are being built. Well, what then happens?
And Mary, one thing to add on this point, I was watching a interview on CNBC of the former CEO of my previous company, Spencer Raskoff, who was the CEO of Zillow for a long time, and now is very involved in other real estate ventures. During the early 2000s, we're talking about 1 million homes being built per year, which is what fueled a lot of the home sales over the past 15 years. And now we're at about 400,000 a year. So just think about that and how long it will take for home sales to catch up. It doesn't happen overnight or even in a year or two.
You are spot on. And the other thing that's interesting is in those years of 85 to 2009, Sean, people were staying in their homes maybe 6 years. So you think about it, they'd move every 6, 7 years. Now they're staying in their home 9.3 years. And so we don't have enough new stuff, one. We don't have, people moving to free up the stuff. And there's not enough inventory that's out there on the market. I don't know if my economics professor was right, but it's called supply and demand. And if we don't have enough supply and whatever demand you have, that's going to rise the price.
Yes.
It's just simple economics. When you look at listing counts that are low in every single category, and I like this particular slide, Sean, because it looks at new listings for August, it looks at active listings, and then it looked at total listings across the nation. They are down
Yeah.
compared to normal years, and even for that matter, you know, it's just really kind of a crazy thing that everything is down. Now, what is our friends at realtor.com? What are they saying?
Our friends at realtor.com say while inventory continues to be in short supply, August witnessed an unusual uptick in newly listed homes compared to July, hopefully signaling a return in seller activity heading toward the fall season, which typically is the best time to buy a home. And let me add one piece here on that note. Uh, Many people throughout the past couple of years signed into adjustable rate mortgages, to get a
Mhm.
more competitive rate. And so as those adjustable rate mortgages expire, now again, they signed them a few years ago, and typically they're 5, 7, or 10 years. People who
Mhm.
bought a home with a 2, 3, 4, 5% interest rate, when those adjustable rate year periods expire, they will have to either take the new rate or refinance. And if they
Mhm.
refinance or take a new rate at 7, 8, 9, when they're used to paying 2, 3, 4, some of those people will be forced to move, and that will help inventory. Again, we're still a couple years out from that happening, however.
Yeah. Well, and if you're in that category, we don't mean to take light of it, but at the end of the day, where affordability is based on a payment, and a
Right.
payment comes out with a mortgage rate, and they have been, a little bit higher these days. So let's look at something near and dear to your heart. Let's look at the lending landscape. Now, this is a crazy graph, and we bring it up, and I always want somebody else to describe it because it's talking about inflation and the 30-year fixed mortgage. So tell us a little bit about this, Sean.
Yeah, you want the sweet spot for this graph to be about 2, 2.5%. If you're in between 2 and 3%, you're probably in a good spot. Now you can see the green line, that's 30-year fixed mortgage rates. That is, what is it? Probably about 7%, which is where we are now.
Mhm.
And inflation is coming down, but even inflation still looks to be at about 4 or 5. It's tough to tell. So we still need inflation to continue to drop, and ultimately that's when mortgage rates will follow. We basically need the Fed to give us a break here at some point to help us in mortgage rate land.
And what I do like about this chart, and although I'm not an analyst, but I've heard the analysts talk about it, they messed with it too early on. And if you look all the way back in like 72, 73, 74, they adjusted the rate down, and inflation just stayed. It skyrocketed back up. So they're really trying to keep all this together in a financial little ball that you pull a string and something else changes, which I think is kind of rather interesting. Again, I'm not that analyst, but what I can talk about is home prices, and home prices come in a flavor of things: median price and average price, and blah 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 blah. But Sean, what I love about this point is consumer confidence in prices weakening at the end of 2022 was 37%. Now, last year, and as we going into the winter seasons here, which is our high season in Southwest Florida, I had people saying prices were going to drop. They're going to drop. They're going to drop.
Yeah,
And this makes sense because 37% that were surveyed in Fannie Mae said that they felt prices were going to drop. Well, interesting enough, when you look at January, February, March, and this last data on this particular survey was done in July, and we've gone from 37% down to 24%. So 1 in 4 people now think that the prices are going to drop. And
yeah,
that's a big adjustment from where we were at 37%, almost, let's call it 40%, almost 50. And now we're down to 1 in 4. I think that's
yeah.
pretty good. What do you think?
It's definitely it's what we see as a mortgage company. When there's such a
Hmm.
big spike in rates in a short period of time, that's when you get to see people sit on the sideline and wait and say they'll come back down. But the longer time goes on and they don't come back down, that's when people start to realize, hey, this is essentially the new norm. They're probably going to be here for a while. And again, just my opinion, but I think we're going to continue to sit here at this interest rate level for quite some time. And so I think we'll continue to see less and less people think that home prices are going to come down as well.
Yeah, I love that. The Home Price Expectation Survey, which is, 100 economists, real estate experts in investments, and market strategists, they got together, or they do get together, and this was estimated home price performance in 23 through 27. 3.32% in 23 of prices going up, comes down a little bit in 24 for whatever reason, maybe pent up demand or what, I don't know. And then look, it carries back over. But the best part of this was, Sean, is that when you look at it's now this next graph says what it was with the original forecast at the end of December was a negative 2.4%. And I might add, AEI thought it was going to be prices were going to jump down 15 to 20%. And that's what we're hearing in the news. And look, they went back currently, and they went back and adjusted it to 3.32% increase this year. So the analysts are kind of like, I don't know. Sean, are you into fantasy football? I don't know. It's a thing around my house.
Mary, let me tell you something. I am in 4 leagues, and I am 11-1 to start the season. Okay.
11 is good, right? You're in the win column.
I've only lost 1 game out of 4 leagues this year. I'm pretty proud of that stat so far.
This is what it is. Fantasy football, as I watch this, and it's football season, it's this dart that somebody hits out, and they try to pull the best things that they know and the knowledge they have at the time. But who was that big guy that just got hurt? Big football guy, and everybody wanted him, and then he got hurt, and that just messed up everybody's fantasy football. Isn't that what the economists are doing, Sean? I don't know. Maybe it's simplistic that I say that.
That guy, his name is Aaron Rodgers, and he's about 30 miles up I-95 from where I currently am. Yes. I mean, let me hit you with a stat, okay? From 1943 to 1947, home prices grew by about 120%. Wow. Sound familiar maybe to the pandemic times?
Sure.
Then after that, for 43 straight years, prices continued to go up. So they went up dramatically in a short period of time, and then they went up steadily for the next 43 straight years. I think, correct me if I'm wrong, somebody can look this up, but in that time period since then, I think there's maybe 7 bad years in terms of home prices going down. Like real estate is as steady and reliable as it gets in terms of investment.
In the 90s, they had all these tech stocks. And I came out of the tech world, and I was like, I'm jumping in. And I jumped in, and they rode up, and I thought it was really brilliant until they plummeted down and lost my money. The one thing with real estate, it's dirt. You always have the dirt. That's the benefit of it.
Those tech stocks in the 90s sound like my cryptocurrency Bitcoin stocks in the past couple of years. I was riding high, and now.
Totally. Yeah. We were brilliant, and then we're not so brilliant. So I love that this stat is 70.7% of mortgage rates that people have in their homes today are under 4%. So what does that mean? That means that if you look at the next little pie chart, that we probably, the ones that are under 3%, they're just not selling. They're just not going to sell. They're going to hold on unless there's some life event, right? That's why people move, life events. Divorce, death, marriage, babies, diapers, whatever. So then you've got the ones that are probably not selling that are somewhere between 3 and 4. And then some that must actually think about hard before they sell. And then probably a yes. And I will tell you that in our neck of the woods, this is really interesting because mortgage rates are less relevant to older homeowners, which, by the way, I would be considered, unfortunately, an older homeowner.
No.
It's true. It's true. I thank you. My head. But 1 in 4 of those, they say 26% of those really don't care because 43% say that they don't need to buy. Of those 26% that don't care, 43% say that they would not need a mortgage. Now, in our neck of the woods, Sean, this, we're 60 to 70% cash.
Yep.
Because You can. I mean, if there's a taxable event when you're going to take the money out of an investment, but you can use those assets, right, Sean, to use those assets to get a mortgage if you want to get a little mortgage or you don't want to have the taxable event. But I'm
Yep.
still saying we're 60 to 70% are cash, which I think is rather interesting, from that perspective. This one slide here, it looks at, you can talk about this, baby boomers, Gen X, millennials, Gen Zs, is the mortgage rate, it's less relevant to those that are my age.
Totally. I mean, the reality is most people cannot afford to buy a home without selling their current home, right? So the people that you are talking about, you said the word older, all right? That's not a direct quote from me, but it's somebody
I love
who's
you.
had somebody who had a lot of years to build up their wealth.
Right.
But that's not most people who are still in their working career. And those people are going to need a mortgage, right? And if they do have an existing home, they likely can't buy before they sell. They're going to need to leverage the equity they've built in their current home. And if they're a first-time home buyer, man, homes are expensive these days. Most first-time home buyers are going to need a mortgage, and some people are even going to need a mortgage that has some sort of assistance or benefits for being a first-time home buyer. So we're talking about a small pot of people who can afford to buy a home cash, even though, yes, in your market, 60 to 70% are cash, but most markets, that's not the case.
That's not the case. And, when you look at Americans sitting on tremendous equity, this was a slide that was very popular during COVID, because I will tell you that, the sky was falling. People had just bought a second home, whatever. They were very freaked out. But 68.7%, Sean, have paid off their mortgages or have at least 50% equity. That's huge.
Totally.
That's huge.
And that's just what I was saying, right? If you are in a scenario where you have a home, right, and it's $1 million house, and you want to buy $1 million house, but you need to sell that home because your money's in equity and it's not in cash. You buy the new home, you sell the prior home, and then what's happening here on this slide is those people have been taking either the proceeds and just paying off the mortgage or paying it down with mortgages that have no prepayment penalties because they don't want to carry the debt and they don't want to accrue the interest, which is a smart thing to do.
Well, people say enough, you guys have educated me on what's happening national, but Mary, tell me what's happening in Southwest Florida. And there's two slides that I'd really like to talk about. And that is, tell me about sales that from a year ago, they're flat. Now today we're recording very late in September due to, a lot of scheduling issues. And today is 1 year from when the storm Ian hit us. Today is that anniversary. And I tell you that because in August, we are at the same number of sales, roughly 2,580-ish, that from this year to last year. So our sales across our whole MLS are the same, which is interesting. Yet, when we look at this next slide, Sean, this is rather interesting to me as well. When we talked about inventory nationally, here's in our entire MLS, we're about a quarter less than we were in 19, 18, and 17. And I like to use those years because really the last 20, 21, and 22, they were unicorn years. Let's face it.
Yeah.
We need to go back to a normal standard market, and we're about a quarter less. So we always say, is it time to move? Well, for a lot of people, it could be. Yes, interest rates are high. Yes, I have a lot of, money that maybe I have in my home. Maybe it's something I need to do, or why would I wait? Sean, life gets short. The older you get, the shorter it gets. That makes sense. And when you start to look at your dreams and realize, what am I waiting for to have my grandkids or my life wherever I want it to be? And in ours, we sell lifestyle, Sean. Why would I wait until, from that perspective, the interest rates go down or life changes? Why not live today? Live it like with gusto. And if you're looking to sell and you want to sell because you need to go back north, you want something different than what you have, it is a fantastic time to sell because October and January are the two highest months in our market where people list, Sean. So if you've had thoughts,
Totally.
get on the market early before January when everybody floods in and start going down that way. We're here to help you, whether you're looking to sell, get on to that next destination, or, as Sean can help you buy with some mortgage, boy, we'd like to help you. So Sean, I always ask, is it time to move?
Like you said, life events happen. Time does not stop as we put buying and selling plans on hold. So yes, of course, it's always time to move, as long as it works for you and you're doing it for the right reasons, and sometimes the reasons that you can't control.
Absolutely. So until next time, next month, we look forward to seeing you in the market update. I'm Mary Bartos from Bartos Group of Premier Plus, and my trusted friend,
Sean Guerra, Tomo Mortgage. Thanks, Mary.